weekend, all. Ira Epstein with your weekly edition of your financial market wrap-up. We're going to look at the weekly charts for this January 12th, Sunday, 2025. You know, tonight what I did is I used this afternoon to write what I call a reality check. I can't share it with you here. I first want to share it with my paid subscribers. But I go into a lot of what to expect, the reality of what to expect, not the headlines, and understand what's about to happen. A week from tomorrow, President Trump is in office, all right? So when he's in office, you're hearing that he's going to sign 100 bills, what those are, what they will mean, the impact. I go through the major points that I think are to be done. And if you sign up now, you know, you can get in there and see what I wrote, because it'll still be on the website through tomorrow. So please do consider that. For tomorrow, we're going to get the month of December budget deficit. The month before December, November, was that deficit of, I think, 129 billion. They're now looking for it about 75 billion. But you know, interest rates are higher. You know, all the things going on. You see the pressure in all the stock market. You continue with that. And the big question you got to ask yourself on this break, is there more leg to it? Or is this the break that you go into the inauguration and then the worst of the situation? Well, is it over or not? I don't know. I think it's too difficult to call right here, so we should go to the charts to see. You can see energy prices are not wasting any time with the Biden ban on what they've done on Russia, with 183 tanker ships have been sanctioned. 2 big oil companies now. So now the market has to skedaddle, if you will. Gee, they can't do business with any of that. If the U.S. hits them with sanctions, what do you do? And that creates a tightness right now. Nat gas up sharply for one reason. You are seeing the deep freeze, and there's more of it midweek coming. So all this is the perfect storm of weather, tightness of supplies coming in, kicking that market up. Bonds and notes, pretty stable right here. Not an awful lot going on after Friday's jobs report, which just showed one thing. The U.S. jobs market is still very, very strong. You can hear signs, okay, it's weakening a little. The word is a little. You're really not weakening very much. As we step over into the metal markets, they are still looking in pretty good shape. I'd question copper, except for the squeeze play that I've been writing about. And that squeeze play, if you go to the London Metal Exchange, look at the price of their silver, their copper, they're out of whack with what's going on here. The reality of the situation is the tariffs. People are scared that when these tariffs come in, which of these important metals will get a tariff. Once we know what that's all about, you'll probably see the shrinkage between those two go. But in the meantime, it causes a natural squeeze play on those that are short these markets, and that's something you have to consider. The dollar's still strong at the expense of most currencies, pushing the 110 area. We'll see what goes there. British pound, I was reading today reports where the market's got at least another 8% drop. Some people building that into the market right now. Wow, that's an awful big amount from here, but that's what they seem to be doing. So when we look together at the S&P here, we can see how the market went up, and we've been getting a correction. You're down right now, starting the month off, which we're at the 12th. The 12th is where we're at. You're down 1.28% so far. For the first time, the market, and I'll take you back to the 10th, which is Friday, the market closed right underneath by 30 points the 18-week moving average of closes, turning the bias of the market down. I do think that's going to be your battleground for a while. But if you just look at the peaks here, for the moment, there's nothing bullish about this. Lower highs, lower lows. When we look at a bar chart of the weekly events, you have that too. The lower highs, lower lows. The other were of closes, so that's different. And you see the battleground that is shaped up right through here. So who's in control of the market? The bears at this point. Where might it go becomes the question. Well, If it doesn't accelerate, I would expect the battleground to be right here, as the market probably takes something of a pause after this break and tries to figure out the Trump presidency, taking out the pen, signing 100 bills. What are they going to do? What's the impact? You know that the news impact will be bearish, right? When he signs all these and he gets them done, the way the news will write this up isn't positive, it'll be a negative. So you got to build that into your thinking. Where could we be going? Maybe the lower Bollinger Band, 56.84. That's 150 points from here. Sort of fits in that if the market wants to wash out even further. Momentum down, bias down as you're under the 18-week trend down. To negate all this, you got to go back and take out the week of January 10th high, all the way back up here at 60.68. That's quite a ways off. Let me just bring you back there, be sure that I'm giving you, 60.68 and a quarter was the right number. That's what I thought it was. So we'll see. When you come to the Dow, it's the same story, but you are oversold here, so there's a little bit of a difference. I would expect that the market, if it continues down, makes a run for the 41,298 level, and we'll see what happens there. 41,300 right now. So we'll see what that market can do. It's about 800-900 points lower. In the NASDAQ, you haven't even gotten to the 18-day average of closes. It still has upside bias. It is corrected an oversold condition, which sort of fits in for the moment with the idea that traders are looking at the tech stocks and think they'll be the best performers for a while still. We'll find out. The chart is saying that. The chart is still saying better support there, and the chart does not like what it's seeing in the Russell. You have a higher high, lower low. You are oversold. The bias is down, and the market's fighting a huge battle to stay over the 18-day average of closes. I consider the 18-day average, as you well know, the line in the sand. It's the number markets often fight at for direction. You just had a bearish crossover of the 18 getting under the 100 on a weekly chart of the 5-year, and with that, new lows for the move. Bearish action, same thing here. Could embed, in fact, and be going down into the 106 area before all is said and done. In the dollar index, you're up and away. Higher interest rates, a strong economy, a strong labor market. That is not something that is bearish on the dollar. Yes, you can get corrections, but those corrections will likely get bought before anything happens. That's at least what I think. And at the same time, I'm equally as bearish on the eurocurrency, which is now, let's not count this week, Monday's action, but let's go to last week, all right? This is a weekly chart. Last week, both numbers under 20. The week before, both numbers under 20, and the week before. So you have a fully embedded reading, which tells me that on good rallies, the pros are going to sell into this rally if the market gets one, still looking for lower levels. I mentioned parity before. It's a very big possibility. In the Canadian dollar, straight on down. Now, Canada is in the news over the weekend with Trudeau saying Canada has prepared their salvo of tariffs if the U.S. hits them severely with theirs. He goes on to say how they have spent more money on the border. He points out that fentanyl from Canada into the United States is not 1% of the total amount that comes in, and the same on illegal immigration. He makes good points there. But we do have a trade deficit with them. How is the president-elect going to handle that? That's what we're all waiting to see. In the meantime, I think traders will be selling the market. The shock would be, what if President-elect Trump puts a 5%, 10% tariff on select goods? What if he does the same with Mexico? The market's braced itself for something a bit different. You have to pay attention to that. In the Japanese yen, it's going to take the Bank of Japan to absolutely bite the bullet and raise interest rates, with the chart saying, no, they're not ready to do that. That is why the market continues to fall down, and now you got your embedded reading on that. So if you lose the embedded readings, it ends this bear wave in currencies. It certainly doesn't look like they're ready to do that. In Bitcoin, well, we had a market that tried the higher high, and now with the action, you can remove this blue arrow. You got lower highs, lower lows. You lost the embedded reading on a weekly chart. You could be going back to the 84,000 level. That would not be a surprise to me. The differential between Brent and WTI, well, it's narrowing in, but you understand the reasons that it's narrowing in. It's everything Biden is doing is adding to demand for the U.S. energy market. You can see that right here. You're up to the 100-day average for the first time since coming back to October, and you're over the Bollinger Band. I'd be a little cautious up there. WTI, same thing. You can see how you're back up to the 2. In rebob gasoline, well, the market could be going to the 215 area. I don't see anything bearish on the chart. I see support back at 201.60. So when I put it all together, I try to figure out where the markets are going, and so does Linn. And what we do is we write about this throughout the day. Now, be you a options trader, a spread trader, somebody that looks for the cash markets, what are they doing? We cover it in the whole spectrum of the commodity markets throughout the whole day, starting Sunday night. So you're not waiting for the morning, oh, what are the pros thinking? We've been doing it since yesterday, actually. We start writing about it. What's the impact of what's going on in California with the fires? What's going on in the Midwest with all the cold weather? What does it do? What's it do for energy? What about government policies? All kinds of special reports. You might want to take a look to see what our customers are able to see. How do you do that? You go to iraepstein.com under the word free offers. Got it? Under free offers. iraepstein.com, or move your cursor right up there. I'm Ira. You'll see the icon if you move it up there. I'll catch up with you first thing in the morning on Monday. You take care.